Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Wednesday. It is hump day, right? Almost halfway through the week. 800-951-0592. That is our toll-free number, the physical delivery of wealth insurance. Talking about gold and silver. It is what we do. AllAmericanGold.com. AllAmericanGold.com is the website. And I did something today that I haven't done very much this year. I actually lowered prices today. We've got a nice, heavy profit-taking day in the gold and silver markets. We got some interesting data. It's kind of a weird day to have it with the data that we had today. We had existing home sales out today. I guess the spring selling season, well, I guess it's on hiatus. Not a great number. We'll get to it. But guess what? The big thing, though, home prices hit a new, existing home prices anyway, a new all-time record high for the month of April. We also got bad news out of Target. Well, the same news we've been getting, right? The consumer having trouble. A lot of the Target shoppers apparently went to Walmart. We'll talk about that as well. But a big test for silver today. Some calls out overnight. They want to see silver hold $31. Now, granted, silver's been above $32. But there was a big sell-off in silver. It held the $31. And why was it big? Because the powers that be say, hey, if silver holds this 31, get ready for 50. Hey, I'd like to see 35 before we talk about 50, but 50's coming. There's no doubt about that. But that was, I want to say it was UBS. And so, right as that note came out, we had a big test, this morning. It was probably right around, let's call it 7 o'clock, Arizona time, maybe 6:45 Arizona time. We had a big sell-off, and when silver sells off, gold will go with it. So an opportunity, I suggest everybody jump on board. We've got silver and gold. All of that's going to be on sale today, so we got some great ways for you to take advantage of it. We'll see how long it lasts, because right now everything keeps climbing back now. So gold right now, it's down 27. Right below 2,400, 23.95. It got all the way to 23.80. So I like that. I think that's really good. If 23.80 is going to be the new higher low, sign me up for that. Sign me up for that. We're worried. Listen, Jason, we're going to see 2,500 this week, right? So let's be fortunate that at least for a week, maybe we get a reprieve. And then silver, like I said, it went down, it got to the, they wanted it to get to 31. It got to 31. Now 31.40 already. So silver doing the same thing, bouncing off here. But just kind of an interesting day, Jason, with the data. Bad news out of Target saying, hey, the consumer's just not there. Sales continue to fall. And then existing home sales, everybody thought that March was a fluke. March was down. They thought April would come back. It didn't. It was down even more. We're on pace to have the worst existing home sales going back. We may go in back to the 80s potentially if this pace keeps up. It's kind of hard to believe, but yet at the same time, prices got even hotter.
Yeah, Joe, it's the inflation that's stacking up and then making it harder and harder with these higher rates to buy a home, which is going up and up in price. It's funny because if this thing continues to go in this direction, slowly or fastly, people are going to think that the 2008 housing crash was a good thing because at least when it crashed, the houses were cheaper priced, right, Joe? At least you got a break on the price. this thing looks like it's going to make it harder for you to buy, and the prices are going to go up, and there's not going to be a break. There's not going to be a way in. So we're going to watch it, Joe, because the rates going down would give people a chance to get in, right, Joe? The job losses, you would probably see at least housing prices freeze, if not go down a little bit. But it's a good point to bring up, Joe, that this housing thing is low sales, but prices stay strong.
Yeah, and even with an increase in inventories, one of the biggest jumps in inventory that we've seen in a long, long time, month over month, but it has no effect. I mean, it's still not a ton of inventory. We're still talking about, less than a 4-month supply. And I think they say 6 months, but I mean, for a while there, I mean, we were below 3 months, and now, but again, pick the metal day to day. Aluminum. So let's see. We've had copper, tin, right? Obviously silver, gold, right? Now add aluminum to the coffee, to the cocoa, to the orange juice, to the gold, to the silver, to the copper, as commodity prices continuing to spike. Rio Tinto, one of the largest aluminum producers, put a force majeure on contracts for aluminum in the refineries in Australia. Of course, Australia, a major aluminum producer. And the problem there, Jason, a natural gas pipeline. Apparently, it's broken, and they don't have any power. They don't have enough power to be producing any aluminum. And now aluminum prices, well, because not enough inventory. Here you go. We'll be back because inflation's going to cool off any minute now. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Wednesday. A quick look in at the markets. The Dow's down 11 points. It's off the lows. I guess they really liked the existing home sale number. They loved it. Right? The crappier, the better. Obviously, they didn't love the price, but they loved that, no one's buying a home, so maybe the Fed will lower rates. The S&P is flat. The Nasdaq's up 18. The 10-year note at 4.42. Crude oil's down a little bit. I don't know if you guys saw Joe Biden, whatever little gasoline reserves we had, apparently he's going to use it because he wants gas prices to go down a few cents over the I guess the summer drive season. That's not what we have it for, is it? Right? Don't you have? Well, if there's an emergency, right? I don't know, a major hurricane. Just call me crazy, right? But a hurricane comes and knocks out a couple of refineries. You'd like to have some stockpile of gasoline, right? To use it. Hey. This will give us 3-4 days while we get the refinery back open. No, why worry about that, right? Let's just use it all now. I mean, this is the idiocracy, and this is why you sit there when we tell you got to be more diversified. This is idiot moves. I mean, just total. I mean, almost like. Do you even have a clue of what's really going on? The grasp of reality slipping away from our federal government. Gold's down 28, as we talked about. Silver's down 40 cents right now. The Japanese yen closing in on 157. We'll keep watching that. But again, we talk about get diversified, getting more diversified. Our lead article, allamericangold.com, Jeff Gunlott saying, okay, listen. I don't know if it's the end of this year or the beginning of next. But this bubble that we're in is getting ready to take a major step. And again, it's not like we're not warned, right? Think about the warnings just in the last several weeks. From McDonald's to Yum Brands, right? Your Pizza Hut, Taco Bell's, Target being the latest, Red Lobster, Cracker Barrel, right? We've got plenty of signs that things are really, again, people are running out of money. It's just that simple. Everything costs more. Everything. I don't care what it is. And it's a whole lot more than what they're telling us, and I'll prove it to you in a minute. But being more diversified is going to be the key. That's why we talk about, the need to have a lot more gold and silver. Whatever you think you have, you need to get more. I'm just saying, you need to be ready because there's going to be a big move. And then, of course, you can use. But then about the stuff, you got to be in the stock market. We always talk about it. You can't have all your money in gold and silver. You can't have all your money in the bank. You can't have it all in houses. You can't have it all in stocks. But there's a way to get more diversified in your stock portfolio. If you got $50,000 or more, maybe it's in an IRA. Some of you can use your 401k. Maybe it's sitting in a bank account. Check out our friends over at YRefi. Why? Because you can get up to a 10.25 fixed rate of return that's not correlated to Wall Street. It doesn't care. Maybe the bubble keeps going. We don't know. I mean, let's face it. The bubble's gone it's gone like a whole year farther than I thought. Right? I mean, that's true. And it looks like there's still a little more life left in it. But when it pops, it doesn't care. Well, what happens? Nothing. You get 10.25%, right? Pretty good deal. You can turn your income on. You can turn it off. You can do whatever the heck you want with it. Check them out. InvestYRefi.com or just call them 888-YRefi24. Now, inflation. They want us to believe. Here's what they want us to believe. Number one, remember yesterday, oh man, we're doing a real good job here. We need a few more months, right? We need a few more months to make sure that we've got it under control. Of course, it's double what they tell us they want it to be. And of course, really, it's more than that because the number that's double isn't even tracking inflation. Let me give you some cases in point. At the end of 2019, a medium French fry at McDonald's, the medium, not the large, just the medium, was $1.79. Today, it's $4.19 for a medium fry, 134%. How about a McChicken? Right? I don't have these things, but whatever, $1.29 for a McChicken. All right. I don't know how much chicken was in it. Probably not a lot. $3.89. So we're talking about essentially, it was the end of 2019. So the beginning of 2020 to 2024. Okay. So we're talking about 4 years. That's 201%. Right. That's like 50% a year. Right? Nowhere close. A year. Now, they're trying to convince us that inflation was only 20% during this time. A Big Mac was $3.99. Apparently now, Jason, a Big Mac, $7.49. That was one of the best ones. That was only up like 88%, right? 88%. That's still, right? They're trying to tell you it's only 20. A 10-piece nugget, $4.99, $7.58. Right? That was the best. By the way, that was the lowest increase on the menu at McDonald's, at least for the items that were shown here, at 68%. How about Taco Bell? A beefy 5-layer burrito was $1.69 at the beginning of 2020. It's now $3.69. 118%. A Nacho Bell Grande, by the way, that was when we used to go to Taco Bell. That was what my wife ordered. I hate Taco Bell. No. $3.29, $5.89 for a Nacho Bell Grande. That was up 79%. How about Chick-fil-A? I like Chick-fil-A. A 8-piece nugget used to be $3. $5.99, up 96%. A medium waffle fry, $1.65, $2.99. You get the idea. I mean, Jason, inflation is so much worse than what they actually say that it is. And they use all of this, what I'll call academic nonsense to try to say that it isn't. I guess if you just didn't eat this stuff, then I guess the price didn't go up.
And it's not just fast food. It's all food, Joe. And it's all things. You mentioned housing before, about housing prices still going up, right? Well, I bought a house in 2020, and I've seen the houses in this area, and I know it's different all across the country, but housing prices went up in the same time frame. But even where it's going up fast where I'm at, it's only up about 40%. And I suspect that that's curbing even lower because of the sagging home sales. And I've told people this. It's like, look, inflation kind of skews the way things actually can be viewed. If you're a homeowner and you're like, well, my house went up 5% this year. Well, at least it didn't go down. That's what you think. But if your Big Mac is 100, 200% more in the same time frame, right, Joe? Or even if the Big Mac's up 30% over the course of a year and your house price is only up 5%, your house is losing value. So the signs of this crash that you're talking about, Joe, are all around us. And food and energy, those things are going to show inflation better than anything else, right, Joe? You have to heat your house. You have to cool your house. I guess you don't have to, but who's going to live in a house that's not being heated or cooled in today's day and age? And food prices, you have to eat. And you're talking low-grade food, Joe. You're talking about food that's hardly even considered food going up like this, and the prices. I go to the produce section. That stuff's expensive. It's way more expensive than it used to be. And yeah, Joe, the housing prices may never go down or might not go down in the near term with this inflation, but that doesn't mean the housing prices are doing good. Joe, it's like it's stagflation. Houses, I guess, are going to be counted in the stagflation. Your wages and your house prices aren't going to go up as fast as the inflation. So this is why gold and silver so much better in so many ways, because gold and silver, and what's great about gold's a leading indicator. It's telling you what's going to happen. And anybody's been watching 2024, seeing what gold's been doing, what kind of wall of inflation is, what kind of tidal wave wall of inflation is going to be hitting us, Joe? Because the prices you just mentioned, I don't think that's going to stop. McDonald's is trying to figure out how to sell this new norm that they've been put into, Joe.
Yeah, and even when you think about it, look at existing home sales. Let's look at it, because the data came out today. The median selling price up 5.7% to a new all-time record high for any April in history, $407,600. Go back to the end of 2019. You're talking about a number like in the 270s, right? So when you look at what we're talking about, what is the real pace of inflation? What is it really? Right? If you're sitting there and saying, my gosh, all the menus, I probably hit three of the biggest fast food places that exist, right? McDonald's, Taco Bell, Chick-fil-A, right? Okay, three of the biggest. And you're hard pressed to find any item that isn't up 80, 90, 100, 200% in 4 years. Existing home sales, the price of a home 4 years later. What are we talking about? 50%, right? 50%. I mean, that best case, 40, 50% higher. Some places it's more than that, depending on where you were. And they're trying to say it's only 20. Everybody's insured. Nobody's insurance. Just insurance is up so much more than that. But this is what I'm saying. This is an academic 20%, and this is why you're seeing the gold move the way it's going, because everybody knows, right? Okay, I don't care how about aluminum? We've got one, and now granted, Rio Tinto, this plant in Australia, it makes a lot of aluminum. It does. I'm not going to, say it doesn't. But it's not the biggest, and it's only one plant. Right? It's not like, oh my gosh, Rio Tinto can't produce any aluminum anywhere in the world. No, it's just this one place. And now aluminum hits a 2-year high literally overnight. Right? This is the world that we now live in. Look at the list that I started with about all these commodities that are going through these runs. And then you sit there and you say, how can home sales be the worst, 40 years? Right? The spring selling season, it's not. Right? Existing home sales, it fell another, 2-3%, and it was down almost 4% the month before. They're saying, listen to this, home buyers, the least enthusiastic that they've been about buying a home going back 50 years. Wait, what was that? Oh, wait, and almost 50 years. That was when interest rates were almost 20%. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Wednesday. And kind of like we said, a weird day in the market because, right, bad news out of Target, bad news on existing home sales. But again, more hope, I guess, for potential rate cuts later this year. But we'll see how it plays out. We had a big sell-off, but it was all at once. So this was a plan, what I call one of these planned paper sell-offs. But people are really focusing in on silver, and really the gold markets here. Remember yesterday we talked about UBS going to China, the whole metals team, checking inventory levels, stock levels, judging things, talking about we want to see a big test of $31 silver. Then this morning, TD Securities said that silver, as physical demand continues to outstrip supply. Listen, this is something, Jason, I've been telling you this for the last couple of years. It takes a while. Look at, I've been saying the same thing about platinum. Right, look at platinum. We're well above 1,000 now. Platinum's going higher than that, believe me. But it takes a few years. Most people maybe didn't know. But from like 2013 to about 2022, there was always more silver that got mined than was used. So there was a lot of silver out there. Then all of a sudden, 2022, there was a deficit. 2023, there was another deficit. Well, guess what? Those two deficits wiped out 10 years of silver surplus. But here's the problem. 2024, there's another massive deficit, right? So now all of a sudden, we're back into this uncharted territory of not only did we wipe out all this excess supply, now we're talking about we're going to go and have less silver supply than we've seen in decades. How many? I don't know. We used to have a silver stockpile. Remember, right? Who was it? Was it Clinton that sold that off? Who sold off our silver stockpile, Jason? Do you remember?
It's been a while, man. It's been a while. Yeah. It reminds me of when the Bank of Europe just sold their gold off, right? before gold went up for 20 years, right? Yeah, I forget. I think it was Clinton.
So let's look at the last time silver broke 30 and actually held. Well, guess what? That was the last time silver went to 50. And according to TD Securities, It went from 30 to 50 in less than 10 weeks. Now, remember, the last time that happened, this was more of a paper-driven event, right? Because at that time, the silver miners were ramping up big, right? They were ramping it up because they could have, oh, my gosh, $30. Hand over. Now, today, they're like, yeah, $30, yeah, okay, that's great. But everything costs more, right? Gas, diesel, the vehicles, the equipment, the labor, this and that, everything, inflation. Inflation wasn't nowhere near where it was the last time. And this is kind of what TD is saying. Hey, listen, we think this is going to be fast. Again, remember last week I said there's a good chance we could have saw $35 silver this week. We still may. Right? Who knows? Jobless claims come in at 250, 260 tomorrow, right? We would be right back on the horse. But he started saying that there is a notable risk that this breakthrough will cause a catalyst of a substantial amount of ETF buying, which we haven't seen. Now, remember, we've been talking about this whole thing, about how this has been a physical market-driven event. Copper, physical market. Gold, physical market. Silver, physical market. Platinum, physical market. Look at aluminum today, physical market. Orange juice, cocoa, right? The coffee, all of it, physically market-driven. But now TDS is saying, hey, wait a minute here. Everybody that's in the metals trade, they know about what we were just sharing. Hey, the last time it broke 30, 10 weeks to 50, and they said, do not be surprised to see a major event in silver. And then they specifically targeted the eroding, what they're calling free-floating inventories at the London Metals Exchange and at the COMEX. Now, what does free-floating mean? Well, free-floating means they actually have it. A lot of the inventory that they like to claim is in the ETFs, which that's not free-floating. No, you can't just go take it from the ETFs, right? Because, right, someone's got to sell it. And they're saying that a small demand in ETFs would take a 35% erosion into the free float if it was repeated again today. In other words, TD is saying if the ETFs jump into the silver market, forget about it. It's going to 50 and beyond because the inventory levels are so exhausted that it would essentially wipe out over 35% of whatever inventory was left available, Jason.
So where do you see the ETFs going from here then? Is that where you see going up, or do you see, maybe ETFs will just keep selling off to try to keep this thing kind of a lid on this bottle?
You know, I don't know. That's the interesting part. What I saw today, and we've seen this a few times. This is a classic, let's see if we can break it. Right? There was a major ETF move to see, okay, how strong is this silver demand really? And it's so far, it withstood the move. I think as we're sitting here right now, this was an opportunity. Remember, we had this conversation about gold a few weeks ago. This was an opportunity to let the silver shorts get out of the way. If I'm right, and the TD is saying that that's what they think, we could see a very aggressive move in silver over the next 8 to 10 weeks. So stay tuned, because I like the setup. I'll just say that. We'll be back. 800-951-0592. I got a couple of options available for you this morning. U.S. Silver Eagles. This is the cheapest they've been since silver smashed above $30 to the ounce. $805 today. $805. So you're saving over $20 a roll here at $805. If you want to buy a case, the green monster boxes right now, I'll just say you this. The only inventory out there right now are 2024s. Everything else is out of stock. The back dates are gone. Of course, everybody wants to charge you more for them but us. But cases, save another $5. A case of Silver Eagles today right at $20,000. I mean, and you know, you've got TD, UBS talking about, you know, $50 silver, very possible. I don't even want to think about it. In 8 to 10 weeks, if this plays out, and they're going back to the last time. But here's what they're saying the difference is. The last time it broke above 30, there was inventory. This time, the quote-unquote floating inventory is at perilously low levels, and any increase in, you know, ETF demand, right, is going to send silver through the roof. I mean, at $50 silver, you're talking about it'd be at least $60 an ounce there. You know, a case of Silver Eagles, it'd be $30,000, right? I mean, and that may be understating it. I don't know. But it is interesting, you know, and of course, obviously news, right? Remember with Costco, buying a huge amount of silver. It's not surprising, Jason, that the silver inventories are disappearing. And again, be patient here, but rolls of Silver Eagles, 805, a case at 20,000 on the gold side. Man, I had a great deal on $10 Liberties yesterday. $5 Liberties. I got 150 of these. 680. Buy 20 or more. $670 on the quarter ounce $5 Liberty. So Jason, we've really got you covered either way here on the silver side of things or on the gold side of things. We'll have to wait. We'll know more about what we think is happening today, where we think that they're like, okay, everybody that wants to get out of your shorts, do it now, because silver's holding, gold's holding, right? Guys, gold's way above the holding levels here. And get ready, right? Get ready, as it looks like this inflation data, Jason, it's not letting up. No matter kind of what the Fed says, this setup here, we could see a very powerful move. And again, you got to remember, silver, it's down to 76 ounces for an ounce of gold. So silver's got a long way to go here just to catch up to gold, Jason.
And we don't know where that number really could end up, right, Joe? When you talk shortages, you know, I think you're like a 50-1 guy, I think, or 60-1. I think 50-1 or 40-1 is actually better. But if the demand stays strong and things physically go to where they should go, you could see 20-1 or 30-1. It could actually happen, and that's where people really go crazy for silver, right, Joe? That's where things. I don't know if we can actually get there. It's the thing is you don't think it can happen until something like that happens. So I think 40-1 and 50-1 is very possible, Joe, under the circumstances. I'm just looking at copper and now aluminum, right?
Yeah, well, you know, and when we look at this, right, so just bear with me here for a second. If you had $2,700 gold and $50 silver, that'd be 54-1. right, which puts it in line. I'm more of a 60 guy myself, right? That's where I think that's the normal area to be. 65, I think, is kind of neutral. So there's a tremendous amount of upside in the silver markets. And when you look at these guys and when they start laying these things out, right, these things make sense. So what do we have? We have very strong demand, right? And look at, silver, the industrial demand for silver, it's unrelenting, right? It's in everything. Everything that you need. Why is copper doing what it's doing? Because it's in everything. Everything, all this green stuff, it's in all of that. And then you start looking at the supply, and here's the problem. $30. It's great. Don't get me wrong. The miners are like, hey, that's good news. But that's nowhere close to how good it was when it hit $30, when it broke $30. What was that, 2010, 2011, whenever that was, for our bottom lines, because everything's so darn expensive, right? And this is kind of where we're sitting here, and when we're looking at all of these things, we need to be prepared for the metals prices, especially when we're talking about copper, silver, gold, throw platinum in that as well, for very big moves that would seem unnatural, right? They shouldn't do that. But the problem was they always thought all along, it's going to get better, it's going to get better, it's going to get better. Think about it. When inflation was quote-unquote 9%, gold was $1,800 because, it's going to get better. Now they're starting to realize, inflation's here for a really long time. And at the same time, nobody wants dollars. Yeah, go figure. 800-951-0592. Final segment coming up. 800-951-0592. Patriot Radio News Hour, Joe and Jason. You know what? I've changed my mind. I don't care how many rolls of Silver Eagles you buy. They're all going to be $795. Let's get it below the 20,000. Let's do that. $795. Any quantity of Silver Eagles at $795 a roll at 800-951-0592. It's funny. If silver just goes to $35, that's going to be below cost, right? That'll be below cost at $795, and then of course the $5 liberties today, 1 through 19. Those are the quarter ounce gold. We talk about fractional gold. Listen, we think I don't think it. I know there's a. Be ready for double the price. Just double it. Double the silver price. Double the gold price. $5 liberties, you're going to be talking about, hey, I need $1,500. I'm going to sell a $5 liberty. That's kind of what we're probably going to be looking at in the future here. And unfortunately, I'm not talking about in 20 years, right? Probably in the next 3, maybe less. But either way, $5 liberty, $680, 20 or more, $670, and scrap the silver. Silver, any quantity, you want 1 roll, $795. You want 5 cases, they're $795 a roll. 800-951-0592. And Jason, I think that's just the right thing to do.
And 2024 has been interesting. We're getting kind of conditioned into it just seems to just go up and go up and go up. We haven't had too many of these down days. A lot of people that like to buy long term.
I actually lowered some prices today, right?
So people that like to buy, the longer term buyers that like to buy the dip, so to speak, these opportunities haven't happened much in 2024. And you could say it's good for a buyer that buys regularly, not good for someone who's just holding on. But you know what? it doesn't really matter. If you're going to buy it and you want to buy it at the best possible price, this is the day this is a buyer's day. That's what pullbacks are. They're buyer's days. And there just hasn't been too many. Joe, we've had sideways, sort of 2,000 gold in 2020, 2021, 2022, late 2023. It just keeps teasing 2,000, not really staying there. And it's been sideways for a while. Great buying opportunities. Well, now it's going. This thing's moving. And there's going to be days like this where you can maybe sneak in. Hey, I'm late to the big push that started, but the big push has just started. And so if you're waiting for the day to jump in, this is a good one, Joe. This is a really, really good day to jump in. Silver Eagles are just flying all over the place right now. Silver Eagles are very popular right now.
And again, think about this. Remember when it broke 30? It went right to it went right up to 31.50. You're like, so this is actually going back and give you an opportunity to buy it right below $30. So it's a great opportunity today. 800-951-0592, and we'll see. We'll know more tomorrow and Friday if we're right. Was this another one of these? Hey, we're letting you get out here, friends. We're telegraphing the move. We're telling you we're getting ready for a power move. All of you get out of your shorts, and we're going to take this market higher. We'll see what happens.